All right. Hi. Welcome to today's edition of Traders Talk. Yeah. So for those who have actually just joined us, welcome to today's edition. And today we are actually going to talk about another very special topic, which is actually related to trading. Today's session is going to be more technical, and of course, for those first timer who join us, just bear with us because we are going to share a lot of information today, especially on uh, a new strategy which I would like to introduce fellow traders or people who aspire to learn how to trade the stock market using options. Yeah. So if you like the show, please share with your friends so that more people can actually see this. And let me just get started. All right. Okay. Things are good. Okay, good. So today's actually this week's market, we will actually start with some market talks, and of course, if you look at the markets this week, right, it has been a bit weird, weird, yeah. So let's put up the market segment here, and let's share this. Just a sec. Let's switch the screen and share. Stop screen. Share this. Okay. Okay. Let's put the SPX. Yeah. So as usual, we actually talk about the SPX, right? Okay. If you look at SPX, this is actually the weekly chart. Let's put it to daily chart. Do you guys find it hot? I do not know why am I sweating. Okay. Okay. So okay, if you look at the SPX market, right? I mean, for the past, I think about 2.5 or 3 weeks, yeah, the market has just been going up, and non-stop. Is it? It has actually breached the previous high. Top here, which is actually at the 4546, and today is actually above 4,700 points. Yeah, so this is actually something good for the market because all the shares generally would actually rise together with the market. But of course, as a trader, I am actually a bit worry of the current market situation. If you look at here, right? If you look at here, so what happened for the past 2 days, like that means Friday and today. If you can actually look at the candles here, right? It is actually a very long candle, and basically, if you look at the body, right, it is actually with a very small body in the middle. So what this means is that the market actually opened at one price, and during the day it actually went up, yeah, and then it actually went down below the opening price, and at the end of the day it closed more or less the opening price. Yeah, so this was actually the price action which we actually saw for the past 2 days, past 2 days, that means Friday and also yesterday. Yeah, so this is what it is. And of course, if you look at the futures price this morning, yeah, so futures this morning was actually down, I think about 12 or 13 points. The S&P mini futures, it was actually down 12 to 13 points this morning. And if I have actually checked just before the show started, I saw that the ES mini futures was already up 2 points. Yeah, so it is actually up 2 points now. When in the morning it was, or in the morning it was actually red. Yeah, so if you look at the market, it is to me undecisive whether it actually want to go up or whether it actually want to go down. Yeah, so for me, I mean, what I am actually currently doing is that because of the market indecisiveness, for me, whichever positions which I have, which already generated some profits, I would just close them. This is my personal action, which I'm actually doing. I'm actually closing those trades which have already generated profits. Yeah. So for example, the Facebook trades which which I have actually entered here, right, somewhere around here, right. We did a Facebook trade here, and again, if you look at Facebook, it went all the way to 346 last Friday, and then it went down. Yeah, you can actually see that it went down. And yesterday itself, on opening, it actually went up about $2 over. And then what happened is that it closed the day with a negative of 250. Yeah, 250. It dropped. That means the price dropped. So when I see these kind of things, I mean, for me, I just decided to actually close the position because of the indecisiveness of the general market. And also, if you look at for this particular trade on Facebook, with a very big candle here, red candle here, I have also closed this position temporarily until I am actually more certain of the price action in the next days. Then it is okay if I can actually enter the trade again. Yeah, so it's actually no issue. In fact, if the price drop even more, it will be beneficial for many of us, because I think that for this stock itself, the a lot of people have actually missed it. A lot of people have actually missed this about 30 20 to 30 points up. Yeah, a lot of people have missed it, and hopefully it comes down again and to give us more opportunity to trade this kind of stocks. Yeah, and the other markets which you actually look at, like the NDX, right, the Nasdaq. Again, you look at Nasdaq, right, for Friday and yesterday's market, it was also similar situation where it has a very long candle, but close. That means in between the candles, again, same situation. Market opened at higher, yeah, went up and went down, indecisive where it actually wants to go, and at the end closed back at similar to the opening price. Yeah, so yesterday was again the same situation for the Nasdaq 100, and that is something which I do not quite like. Yeah, and following on through some of the things which we have actually spoken about during the earnings last week, right? Again, this quarter's earnings is actually also very very weird lah, very weird, where you start to actually see a lot of stocks gapping down. If you look at stocks like, say for example, one is actually on Square. Yeah, Square, you see that it has also generally at this point in time, right here, the market has already gone up, right? The market has already gone up, and then but stocks like this is actually coming down. Yeah, especially a lot of those pandemic stocks. Yeah, pandemic stocks has actually already started to come down. So when they did their earnings here, the stock actually dropped by I think 20 yeah, a lot here is 255, right, to 236, 20 over points. Yeah, and of course when it hits this 200 EMA, there seems to be a bit of support, and it has started to move around at this level. Yeah, so this is actually Square, and there are a lot. I mean, what other stocks? Of course, the earlier weeks, you can see that Snap has actually dropped almost 30%. Yeah, and then what else? You also can see we spoke about this during our special edition of the Traders Talk, where we spoke with another trader. Stocks like Starbucks, right? You can see what happened is, again, during earnings, it has actually gapped down, and post earnings, it has actually now moved even higher than before earnings. Yeah. So again, I see that a lot of market manipulation is actually happening this in particular this earnings season, where I say that a lot of the market makers are actually taking profits, yeah, taking profits, yeah. You see, take profits and then move, push it down, and then they come in again to these stocks, yeah. Um, uh, Other high flyer stocks right now we saw was things like AMD, yeah. AMD, again, you see that the rise is actually quite parabolic after the earnings. Yeah. So a lot of people are also chasing this kind of stocks. But I'm staying behind, lah. Yeah. So instead of going through AMD, some of the positions which I have actually taken on is TSM. Yeah, TSM, which TSM, yeah. We also spoke on this at the special edition on TSM, where we entered a bullish trade on TSM. Yeah, we were watching it, and of course, because of the stocks like AMD uh, went up. Qualcomm is another one which actually went up. So these are actually pulling up, I would say, indirectly affecting some of these chip stocks, which has also moved up together with the sector. Yeah. So again, Qcom. Yeah. So this is actually Qcom, yeah, Qualcomm. Yeah, you can see that Qualcomm has gapped up 20 over dollars here. Yeah, so 20 over dollars on earnings. Yesterday earnings was on uh, Roblox. Yeah, and if I saw the pre market, I think it actually went up by 20 over dollars. RBLX, RBLX, yeah, RBLX went up. Pre market is about $19. Yeah, so pre market about $19. uh, I, I I did not do an earnings trade on Roblox, but I still had a naked put on Roblox, which is expiring on the 19th, which I just left it because it is actually way down here. It's way down here. So of course, with the pre-market increase of about $20, way up to about $97 here, right? That will actually be good to some of our positions on Roblox. Yeah. So so I don't know. These are some of the things. I mean, some of the more interesting things which has been happening in the market. Of course, if you have any stocks which you want me to comment, yeah, please type in on the chat box. Please type in on the chat box so that I can give some comments and views on the stocks which may interest you, yeah. So yeah, and the other thing, before I forget, yeah, on the Chinese stock, yeah, a lot of people are asking about the Chinese stock, what's happening to it, and whether it can have a comeback. Yeah. So the last week was actually quite bad for the Chinese stock, very bad for the Chinese stock. And I think since yesterday itself, some of the we see a bit positive on some of the counters like Baidu, uh, Baidu, Tencent was okay, not so much movement. SE was down. I do not know why SE is down. Yesterday, I think it was actually down by quite a lot. Yeah, SE was actually down by quite a lot. Again, you see that this SE, right, is actually coming to earnings. Earnings is actually on 16 November, and it has actually went down by 20 over points, if not mistaken. Yeah, 20 over points. No, more than that. Yeah, yesterday about 13 points down. Yeah, SEC Limited. Yeah. And again, this is quite volatile on it. But again, since yesterday, and if you look just now, Hang Seng actually is positive today, and I would think that it would do good to some of these stocks. Yeah, the China Tech ETF, which we follow, right? The China Tech ETF, which we follow, which is actually KWEB, right? KWEB is also positive yesterday, up by about 120, yeah, up about 120 yesterday. Last week it was actually a disaster for KWEB. Of course, some of the positions which we have on KWEB, we had to actually do some repairs to roll it forward. But it's okay because KWEB is actually trading sideways here. I would still think it is actually sideways between 50 to about 40, 46, 47. Yeah, between this range, it is actually trading. And of course, if the Hong Kong market or the China market is actually up today, hopefully that will add on to the improvement of KWEB. Let's see, the pre-market is actually 4824. Yeah, pre-market is 4824. Just slightly up, and let's see what will happen when market opens later. Yeah. So again, remember, market have actually is now open at 10:30 p.m. Yeah, 10:30 p.m. I think the daylight savings is since yesterday. Yeah, so it's past. I think yesterday was the first day where we moved into market opening from 10:30 to 5 5:30 5 a.m, right? Yeah, 5 a.m. Yeah, so it is going to be later nights for traders, and hopefully that will not you will not lose sleep lah. You will not lose sleep. Yeah, and that is actually the market wrap. So I don't see any requests from the viewers to comment on any stocks. But if you have, just punch it there. We may come back later. Yeah. Otherwise, I will just continue to actually go on to today's topic. Yeah, today's topic, which is actually trading hard versus trading smart, and structured trading with guaranteed outcomes. Yeah. So this is one thing which is actually very excited. Okay, I'm going to teach something new today. Yeah. Let's do the share screen. Yeah. Okay, so for those who are already trading, yeah, options, just follow me. And of course, for those people who are new to trading, just follow the concepts behind. Okay, PayPal, Cindy, PayPal and Neo. Okay, trend. PayPal is a disaster. I think yesterday they actually made earnings, and during the post earnings, I saw that PayPal was actually, the earnings was positive. Then PayPal was up, and today, but post that this morning again, I saw PayPal pre-market, PYPL. PayPal pre-market is actually down by 10 points. 10 points. Yeah. I mean, let's look at PayPal before we start. Yeah, since Cindy wanted to actually talk about PayPal. Let's go backtrack PayPal share. I mean, I personally have some positions in PayPal which is not working very good lah. I mean, if you look at PayPal, right? Okay, if you look at PayPal, right, you see it around October, right? After October, the stocks are not only PayPal lah. If you look at all the payment stocks are okay. All the payment stocks since October up till now is actually a disaster. uh, PayPal is one, Visa is one, yeah, Visa is one. You see the trend is actually more or less Visa is one, Mastercard is another one, yeah, Mastercard is another one. All actually went down. Okay, but the thing different between PayPal, Mastercard, and Visa is that both Mastercard and Visa has actually went up. Mastercard and Visa has actually started to go up since I think end of last week. Both have actually gone up, except PayPal. Except PayPal. Okay, so earnings was yesterday announced. Okay, from the outlook of it, it seems positive earnings. But today PayPal is actually down by 10 points. Down by 10 points. Okay, I mean, for me, again, these are quite weird things in the market post earnings. Okay, and I mean, this is not a stock, not a recommendation. Okay, but what you can actually what I would see what I can do lah. Yeah, I mean, since I already have some positions on PayPal, which is all in the red. If the prices are not too expensive, I might actually want to do some bullish trade if it drops down. If it drops down, but be careful on what you can lose. Yeah. So trade on what amounts you can actually lose. 100 to 150. If you can actually set up a trade between $100 to $150. Directional trade, and it has to be a up direction. Means that you let the PayPal price actually drop down, yeah, drop down, and hopefully it will actually bounce back up. But let's do a longer period and see what kind of price supports which it actually has. Yeah, PayPal price supports. Let's see. Okay, price support. Okay, at this level 223. 223, there is actually one level at 223 here. And because today is actually gapping down to 219. Do you see 219 here? Yeah. 219 here, right? Let's make this bigger. Yeah. So 219 is actually here. It will actually gap down to 219, which is actually at this level here, 219. Yeah. The next support level which I see is actually at 208. Yeah, 208, which is still far on 209. Yeah. So if it happens lah, yeah, if it happens, if it managed to actually drop to 209, yeah, I would say it can also be a point to actually do a cheap bullish trade. Do a spread. Do a spread. That means you buy at the money call, and sell a higher out of money call. Yeah, so do a spread, push down the price to a lower price, like basically you target it to drop down to 209 and below. You can actually place a market order based on 209, 209 and below, and to move it up back to probably that means you do probably a 210 call, and you sell 215 or 220 call, yeah, a spread, but put it lower so that if it actually really drops, it can actually pick you up at the very cheap price. Yeah, and then if it bounces up, then you take the trade. Otherwise, I would not enter unless it's actually a very cheap trade. Yeah, and then if it bounces, then of course you will actually make quite a lot lah. Just like the Starbucks trade which we have actually done last week, where I mean, in a short 3 days, basically we are talking about 4x returns. 4x returns, yeah. So this is a type of trade which I actually enter on PayPal. Long term wise, I would say not. Probably there are better candidates to actually do. Or if you want to trade on a longer term basis, PayPal. Neo, okay, Neo, I have not traded Neo for a long time. Yeah, Neo, I have not traded. Yeah, because of all the China issues and all these kind of things, right? I have actually not traded on Neo. Yeah, And of course, Neo is actually on EV, right? EV. Elon Musk wanted to sell his shares, right? Did a poll on Twitter. And asked whether he should actually sell his shares or not. Yeah. So of course, because of that, Tesla share price actually dropped yesterday, and I have actually no views on Neo lah, because I have actually not traded Neo for quite some time. Yeah. During this time, of course, I did quite some trades on Neo, but after a while, the premiums out from Neo is not that great. Not that great. In fact, let's see what kind of IV Neo has. Yeah, the premium are actually not that great. The the IV is actually about 71 now. 71 now. And the IV rank is about 17 or 18. Yeah, so I did not trade Neo because the premiums option selling was actually not that great. So that's not there. Yeah. So these are the two stocks which Cindy wanted to do. Yeah. So I hope I have given some of my personal views. These are all my personal views, and you need to actually do your own due diligence if you actually want to do any trades on them. Yeah. Okay. Let's go back to the topic today. Is actually one new strategy which I actually want to bring on to you guys. Okay, how did I actually come up with this topic is because over the weekend, right, I have actually attended some of the trainings, like some of the trainings, stock trading trainings, and I noticed, I noticed one thing lah. I mean, at the end of this training, basically, the trainer actually said that the the target there is basically they say that, okay, what's their return like, what are they actually targeting, and all this kind of thing. So the trainer actually said that they target a return of about 20%, 20% return. But of course, when I actually look at how the whole trading scheme and basically what are the things that is actually involved and what do they do, right? I mean, to me, is really a lot of work lah. Really a lot of work. And of course, if you trade stocks, and of course, whether it's actually a short-term trader, whether you are actually a value investor and all, I mean, one of the fundamental things is, of course, they actually read a lot, do a lot of analysis, read. That means on any stocks they actually go in deep, do a deep dive, review the stocks, look at their cash flow, look at their earnings, look at their annual reports and all these kind of things, do projection, do valuation, and then on top of whatever they have actually studied, then again they actually go to the charts, look at the technical analysis and all these kind of things. So again, a lot of things involved, but at the end of the day, what kind of expectation do they have in terms of what kind of returns they actually want to generate? And of course, if they target a return of about 20%, right, then for me, I mean, personally, I feel that is actually a lot of work to do to generate a return of 20%. And of course, when one of the reasons why I personally do options trading, right, is to also get away from this too much work and effort for X return. Yeah. So of course, the X return of 20% would be good. I mean, it's actually a good return, but what does it commensurate with? Yeah. If you look at this guy, I mean, this guy here, I mean, what they basically show is stock trading and investor, right? They actually do a lot of work until they drain themselves out. Yeah. And of course, the worst thing is if you are not a full-time investor or not a full-time trader, means that you have a job, if you are working and all these kind of things, and where are you going to find the additional time to really focus on this and to be good at it in order to generate a return of 20%. Yeah, so that will be very tough, right? So for me, I was actually in the same situation. I had a full-time job, and at the same time, I actually want to generate additional income. And where do I do it? And of course, one of the things which I did in the past was also get involved in stock trading. And after doing it for some time, and of course, the thing is, I found out too much work lah. And even now, the fact is, if I look at the industry again, it really involves this kind of work lah. I mean, you cannot get away from this. So I actually moved away from purely doing stock trading, and also doing value investing on a so-called more not full-time, I mean focus basis. I move away from that and actually move to trading options. Yeah, because when you trade options, right, it actually gives you a lot of different ways in order to generate the kind of returns which you want. Okay, I mean, the kind of returns which you want means that if you want to generate a 20% return, right, then you actually work on using this option, this strategy. If you want to generate a return of 2% a month, then you actually do this strategy. And if you want to generate a return of 40% a year, then you actually move to this strategy. Yeah. So you can actually really set up what kind of returns which you want, in order to and structure out the kind of trades or the kind of strategies which you implement. Yeah, so that is what options allows you to do, and a lot of people do not actually understand this. And of course, because they do not understand this and they don't get involved in it, and they continue to actually do the very hard and manual labor work here lah. Whereas the options trader is actually having nice coffee, shaking leg, just doing and structuring trades. Yeah, so this is actually important. Yeah, so structuring trade with guaranteed outcomes. Yeah, guaranteed outcomes. And I want to say guaranteed outcomes means not 100% profit lah. Guaranteed outcomes means outcomes which you want to achieve. Yeah, want to achieve. Yeah, like what I've said, if you want to generate 3% return, use this. If you want to generate 30% return, use this. If you want to generate 40% return, use this. Yeah, so that is what I mean by guaranteed outcomes. Okay, these two we have actually gone through. Okay, so again, that is actually what I spoke about on returns. Yeah, so what kind of returns do you actually want to achieve on a consistent basis? The word is actually consistent. Okay, same if you are a full-time stock trader, or if you are actually a stock trader, you want to actually achieve one return on the consistent. Yeah, so the trainer on the stock trading mentioned that 20% return is something which they actually strive to actually achieve consistently on the yearly basis. Yeah, so this is actually what the returns which they want to do. Yeah, and of course, if I want to actually get involved in trading on a professional basis, I would actually want to make more than 20%. Yeah, nothing less than 50, if not 100%. Of course, would be something which we are striving at. If we want to really get good at trading the stock market using options and on a professional basis, not a full-time basis. Professional basis and full-time is different, because of course the time you which you actually use to trade the markets using options, you don't have to really do 1,001 things to analyze it, a lot of things, but you can still enter trades based on purely looking at charts. Is also possible. Again, understanding on a macro scale of just the stocks which you are trading. For example, say Microsoft, Facebook, Apple, Google. Yeah, these are stocks which everybody know. Yeah, you don't even need to actually look at the financials. You know it is actually strong companies already, right? Yeah. So again, when we apply this kind of concepts, we really save a lot of time as I really save a lot of time as options trader. So that's why I love to actually trade options so much, because it can give me guaranteed outcomes. It can give me guaranteed outcomes, which I can know upfront before I even put in the trade. Yeah, upfront. That means if I enter a trade, I will already know that at the end of this trade, when the options expire, I will either make 3%, yeah, or I will lose maybe 100 or $200. And what is my probability of the trade when I actually execute it? Yeah, so this is what options is actually all about. It's all about structured trading. Yeah, structured trading. And let me explain what is this structured trading using options. Yeah, like I said, profit and returns is actually known upfront when you actually enter the trade. And I'm not talking about purely buying calls and selling puts, because buying calls and selling puts are for really for traders. If you purely use this strategy to trade options, technically you are just how to say, you are just getting a 50-50 chance to win lah. Yeah, if market goes up, price goes up, you win lor. If price goes down, you lose if you buy a call, right? And then if you buy a put, if price goes down, you win. If price goes up, you lose. Yeah, so that is it. But that is not really the focus of the true professional options traders. True professional options traders can use directional trade as trades which will give them higher returns. Yeah, but on a normal basis, most of the time they actually do structured options trading. Structured options trading. Yeah, and of course, structured options trading, you know what are your profit and what are your returns upfront before you put in the trade. Then of course the second one is actually the duration, how long you actually want to do the trade, whether it is actually for a week, whether it's actually for a month, 2 months, 3 months, or even 1 year or above. Yeah, so actually the duration is actually known in that. And then the probability of winning is also known at entry. That means at the point you actually put in an entry, right? Okay, for example, if you are selling a 20 delta put, if you're selling a 20 delta put, I know that basically more or less it is actually at one standard deviation move of whichever expiry is that. One standard deviation means that it gives me 68% probability that I will win in the trade. You see, how I actually frame my mind, that when I actually just do this, I already know what kind of probability which I will achieve on the trade. Yeah. So with that information, then we couple it to looking at the charts, to see where the prices are, and that basically gives you the enhancement, profit enhancement. Yeah, profit enhancement, where it can actually give you even higher probability that you will win in the trade. Yeah, not only looking at some of the Greeks of the options. Yeah, couple it with charts. Yeah, and then of course max risk is also known. That means for every trade which you actually put in, you know how much you are going to lose. Yeah, if you are actually a stock trader, of course you have your stop losses. Like if you are investor, then of course you might not have a max risk, but maybe some mental stop loss which you actually put in. Repair again. Okay, repair is actually very important. Okay, what is this repair? That means when we trade options, when we do structured trading, if we get into trouble, that means if the trade don't go on where we want it to go, okay, it is not necessary that you will lose the trade. Okay, when you do options, yeah, and if you are doing it with some selling premiums or selling options, right? There is always a thing what we call repair. We can actually repair the trade, either to lose less or even win in the trade, even if it actually goes against you. Yeah, in from your initial entry. Yeah. And then again, these are actually some of the examples. I might have actually covered it earlier, the explanation, the difference between the different types of let me put it bigger, the difference between the different types of things. Like for example, here's three category of people. One is actually from the perspective of an investor, one is actually perspective of a stock trader, and then one is actually on the options trader. Okay, capital wise, the investor, I mean, all three would actually need capital. Of course, the highest capital would be an investor. They need the highest capital. The stock trader, they need a lower capital. And of course, the options trader, you can actually structure out what kind of capital which you actually want to trade with. And then that means basically, if you have a low capital, you apply this option strategy. If you have a high capital, you apply this option strategy. That means basically everything can be structured. It does not mean that if you want to trade options and you only have 1,000 US dollar, right? You cannot trade options. You can, yeah. In fact, sometimes certain strategy you can trade with lower capital, as low as $1,000, you can actually already start to trade options. Yeah, and of course, returns for investor. After reading all the annual report, all the analyst report, doing the financial analysis, value investing, and then looking at the charts, doing the technical analysis, they enter and buy a stock. Hopefully, hopefully, okay, it will go up lah. It will go up. So this is actually investor lah. I mean, they do a lot of work and then hopefully it will go up. Of course, the more work they do, they get a higher chance lah, because they did their due diligence already, right? But at the end of the day, it's also hopefully, yeah. And then for a stock trader, of course, what kind of returns they are looking for is basically a risk to reward ratio lah, yeah. Because as a stock trader, basically they talk about expectancy. Okay, they need to actually win more than they lose. So they actually structure out how they trade the markets using a risk framework, yeah, a risk framework, and also going into high probability trades. So this is actually a stock trader. But again, a lot of things actually need to be done. When I was actually a stock trader and doing all the right thing, most of the time I get stopped out. I get stopped out means I enter a trade, everything is correct, all the stars are aligned, enter a trade, and 1 or 2 days after I enter the trade, I get stopped out of the trade. That means I lose on the trade, and then the next few days the trade goes on into my direction. Yeah. So again, a lot of times, it's not that you are doing the wrong thing, but there are a lot of market manipulation in the market, which screws big time the stock trader. Yeah, really screw big time, because as a market maker, right? If you do not know about this, as a market maker, do you know that every time you actually put in a stop loss in your trade, if you put in a stop loss in your trade, the market maker will know and will exactly see where your stop loss is. How do you think that every time when you enter a trade, you put a stop loss there and you get stopped out, and immediately after you get stopped out, the price goes up? This is manipulation to the highest degree, that they take this information of all your stop losses and then they stop you out, and then after that they move the price up. Yeah. So this is really what's happening if you are a stock trader. A lot of times this happens to you. Yeah. Same thing to me, has happened to me a lot of times, until I gave up to become a a stock trader, and I move on to become a options trader. And of course, the returns, like I said, you structure it out what kind of returns you have, and you go into the option strategy based on the returns which you actually want to achieve. Yeah. And then of course, time involved, investor time, that means the investment duration. Investment duration, investor is actually long term. Anything more than 1 year would 1 year is actually long term. And then of course, a stock trader is actually short term. Yeah, it can be minutes to days, or even weeks or months. Yeah. And of course, if you are options trader, you structure out what type of time frame you want to do it. Yeah, it can also be short term. Yeah, 1 or 2 days, month, years is also possible. It depends on, again, the first thing, the returns, what you want, and again, how much time you want to involve yourself into trading. Yeah, how much time you want. Yeah, like the income strategy, which we train people to actually use the income strategy. Basically, we are talking about generating a return, targeted return of 2% a month, 2% a month, and the time involved in terms of generating that would be monthly basis, and you do no more than 1 hour a month invested into generating that kind of returns. Yeah. Okay, then of course probability for an investor is uncertain. You can do a lot of things, but at the end of the day, the certainty is not guaranteed. It can only be 50-50, like either you go up or you go down. Yeah. So that's investor. Again, stock trader is the same. You have a probability of either going up or going down. And of course, as an options trader, you structure it out what kind of certainty you want. And it's very simple. The concept of options, I can tell you, is actually very simple. The risk and rewards are actually together. Okay, the thing is, of course, if you want to actually take lower risk, okay, you want to take lower risk, you get paid less. As an options seller, I'm not talking about buying options and selling puts. Yeah. Okay. Sorry, buying options or buying puts. I'm not talking about that. Okay. As a option seller or a premium collector, right, you can actually structure out your probability. If you want to have a high probability, means 90% sure win one, 90% sure win one. Okay, then you sacrifice on the premiums or the returns which you get. You get lower returns. Yeah, you get lower returns. If you actually want to do trades which are more risky, that means you get higher returns, but your probability will come down. Yeah, your probability will come down. So all this can actually be structured, and we don't just simply structure it based on that. We can also look at the price in order. That means the price action of the stocks in order to structure it. For example, just now we were actually talking about PayPal. Okay, so PayPal is expected to drop by $10. And if we have the expectation that PayPal price would actually bounce after it has actually dropped by 10 or 15 or $20 to bounce up, right? Then, of course, in terms of structuring the options trade, say, for example, simple strategy, you are selling a put. Then, of course, you can actually do a higher delta options. That means you get more premium because the price have already dropped by 10 or $20. How much more you want to drop? If your direction is that it will bounce, yeah, how much more you want to drop? So your risk for downside is already, to your expectation, is already limited. Then you collect more premium by selling the put. You don't do a delta 20 put anymore. You can do a delta 30 or delta 35 put to collect more premium, because your expectation on that counter is that the will go up, it will bounce up lah, it will bounce up lah. So that is actually how we frame our mind and how we actually execute the trades using these options, probability, and also structuring our trades. Yeah. And of course, risk. Next one is actually risk. Okay, investor has the highest risk because as an investor, you actually put a lot more capital in it, and you have no control whether the price goes up or go down. Yeah. If Elon Musk wants to announce today that he's going to exit and step down from Tesla, what do you think will happen to Tesla? It's not under your control. It's not under your control. So as an investor, you have actually the highest risk. And then of course the stock trader, again, you structure your risk 1:2. You put in your stop loss and all these kind of things. So it's actually control. Can also be structured. Again, options trader also structured. You can, if you actually enter into a defined risk trade, that means the max loss is actually defined on entry. Then of course you can actually already know if it goes against you, what is actually your max loss. You already know it upfront. Trade repair. Yeah, as an investor, cannot repair lah. I mean, stock price drop lah. I mean, what can you do, right? And then of course, as a stock trader, then you have your cut loss. And of course, as the options trader, depending on what type of trade which you do, there is always possibility that there is possibility lah. There may be possibility to actually salvage it or repair it. Yeah. So this is actually the difference. Okay, going back to one strategy which I actually want to share with you is actually what we call in the money covered call. Okay, and I will use this example to actually structure out a trade to actually show you that getting a return of 20 to 40% using options, structured options, more or less so-called guaranteed results is actually possible. So that the time you actually spend to actually structure out this kind of trade, and against the time you actually do on value investing or do on stock trading, you can actually decide whether you want to specialize or whether you want to focus to be a value investor to get 20% return, or whether you actually want to become a stock trader and generate an average return of 20%, or you can actually become a specialist in options when you can actually structure out trades that can give you a so-called guaranteed outcomes with the returns which you desire. Okay, so this is actually a stock on KWeb. I use KWeb as an example. This is actually not a recommendation, but I just use this as an example. As an investor, you actually buy the shares at today's price. If you feel that KWeb have actually dropped about 50% down, and basically the chances of it going up is actually very high, then you buy the stock. Okay, but when you buy the stock, you actually pay for 100 shares, you actually pay $4,800 to buy 100 shares. Okay, and then as a stock trader, you cannot get into this trade because I don't see any trade set up as a stock trader. No chance, cannot go. Yeah, because if you see the price go up one day, up one day down, one day up, one day down, there is basically no setup for KWeb. And for the time being no setup, so no chance, cannot. Okay, then options trader. Okay, many ways depending on, again, how you actually want to structure, what is your time frame, what is the kind of returns which you actually want to generate. One example is if you want to generate 3% return, say in a week, 3% return a week, okay, with 74% probability, 74% probability generate 3% return. Yeah, then structure out a trade by just selling a naked put. Yeah, I'm not going to explain the how it works. Yeah, but just give you an idea how to actually do it, how the options trader can have multiple options. That's why it's called options, right? They have multiple options to structure out trades based on what they want to achieve. If you want to get a 35% returns a month, okay, structure out a a, a spread, yeah, a credit spread, which you can actually get a 68% probability of win with a credit spread. Okay, and then if you actually want to generate a return of between 20 to 40% a year, with 68% probability. Okay, this is interesting. Okay, because this is what trade I actually want to actually explain to you today. Yeah, we might go over time compared to the normal one, which we stop at 8:30. Maybe we will go to another 10 minutes extra lah. But stay to me till the end. I think it's going to become more interesting today. Yeah. Okay. So 20 to 40% return. Who wants to actually get 20 to 40% return a year with 68% probability? Who is interested to learn? Yeah. If you are interested to learn, give me a thumbs up so that I can actually share this with you. And if you know friends who actually want to get 20 to 40% return a year, then please, you have time to share this talk to them. You still have time before I go into the trade. Okay, so this is actually a KWeb. It has actually dropped 58% down. Yeah, so for me, my perspective or my view on this stock is that the downside can be already limited. Okay, first, as a trader, you form you give a judgment analysis of this stock. Okay, you have to have a so-called perspective first. Yeah, so my thing is that, okay, it has already dropped 58%. The downside may be limited. If it drops another 10%, possible drop another 10% to this level here, which is about $38. $38. You see this level here, right? It might drop another 10% down, yeah. Or go down to about $44, which was the previous low here, 44 to 38. Okay, so that is actually the range where it is actually possible to drop. So my analysis. Okay, then from there I structure out the trade that will give me this 20 to 40% return a year. Okay, and this trade is actually called in the money covered call. Okay, this is not a conventional covered call which you actually learn, where a conventional covered call would involve buying 100 shares and then selling out of money calls, right? Covered call, for those traders who are familiar with covered calls, including our students, who is in the income generation secret framework, which we teach you how to actually do covered calls. In case you're assigned the stocks, you do a covered call, which you sell out of the money options. But in this case, we are actually structuring in the money covered call. And what is this? Okay, firstly, buy 100 shares is the same. Second one, you sell in the money call, and this in the money call can be a range of between 3 to 6 months. You decide how long you want to do it. You can actually decide. Yeah, 3 to 6 months. Okay, if you want to do it every quarter, do 3 months. If you want to do it only 2 times a year, you don't have a lot of time, right? just do it on a 6 months basis. Okay, you sell in the money call. Okay, what is in the money call? Okay, for example, KWeb is actually trading at $48 here. Okay, $48. Any price at from 49 and above, that means 49 or 48 and above is actually out of money. Out of money. These are the calls. These are the calls. Okay, and any price below 48 is actually in the money. Okay, so what we do in this trade is actually sell, buy 100 shares, buy 100 shares at market price. Here is actually about 48.15. This is the market price is about 48. Let's put it at 48.15. Yeah, we buy 100 shares at the market price, and then we sell one in the money call, and we collect $8 45 cents or 8 over dollars. We collect the money here. Okay, upfront when you do this, you will need to pay a net amount of $39.50 for this trade, times by 100. It is actually $3,950. Yeah, and of course, that if you are paying cash, if you have a cash account, you need to pay $3,950. Your max loss is $3,950. Okay, and your max profit is $350. Okay, and your probability of win is 68%. You see what I told you just now, right? Structured, right? This is all structured at the point you enter the trade. Isn't it cool? Okay, and this is only possible with options that you already know upfront before you actually do the trade. What is actually your comfortable line? What is actually the loss which you are comfortable to make per trade? Okay, what is the profit which you actually want to target to generate, and what is the capital which you actually want to use for this trade? All is actually known, and how high the probability of win which you actually want to set this trade up. Yeah, okay, so then buy 100 share, sell one call. We take it at 10% below the current price. Okay, and I will explain why 10% below the current price. This is actually as a buffer for you. Yeah, 10% below the current price. And let's see the numbers. What this trade works out to be like. Okay, buy 100 share, 48.15 at market price of 48.15. You pay $4,815. Okay, when you sell one option, okay, at strike 43 just now, 6 months date of expiry. Just now the expiry date here was actually May 2022, which works out to 192 days, which is about 6 months. Yeah. And for this selling of options, when you sell options, you collect money. Yeah. people will pay you, and you collect $865 the day or the second you do the trade. You collect it upfront. Then it, because this is actually a collection, this is actually a payment. It netted off and it gets to 3,950 or 3,950 lah. That's where you actually get 3,950. So the net paid is 3,950. And then on expiry, what will happen? Okay, on expiry, these 100 stocks which you sold, if the price is actually above because it's in the money ma. On day one you is already in the money. In the money options would tend to be assigned. That means assigned means that on expiry 6 months later, if the stock price is above $43, you will need to actually get assigned. That means your shares would be sold. That means sold, you need to actually sell. You need to actually sell 100 shares at $43, regardless of the stock price. The stock price can be $143. But because you actually entered into a contract to promise people that you will sell the shares to them at $43, yeah, you will need to honor this obligation regardless of the stock price. Yeah, so you will actually get assigned the stocks assigned, and you will sell your shares at 43. You bought 100 shares here. That means these 100 shares which you bought at 48.15, you will need to sell it at $43, and you will collect $4,300. Yeah, you will collect $4,300. So when you collect $4,300, right? Remember just now you actually paid 3,950. Remember, when you entered the trade, you paid 3,950. Yeah. So what happens is that at the end of the day, you sell and you collect more money than when you bought it. Okay, and that difference is actually what we call an net income to you. That means for the commitment to actually do this trade for 6 months, right, you are going to be guaranteed $350 if the stock price is above $43 on expiry. Yeah, you'll be guaranteed this 350. So if you take 350, you divide it by 3,950, okay, you get a return of 9%. You get a return of 9%. Yeah. So again, going back to the hypothesis just now, KWEB price has actually dropped down 58%. Yeah. You do a buffer of another 10%. So basically, your trade, you expect that the worst KWEB will do is actually drop down by 68% or almost 70%. Likely to happen or not likely to happen? May happen, but the chances are it will probably not end up 70% down. Probably after 6 months, hopefully it will go up. If still down, I think don't worry about stocks. You have more other things to worry about. Yeah. So again, the chances are the stock price will end up above $43, and as a result, you will get to keep 350 on a cash basis. Means that if you pay cash 3,950 to do this trade, you will generate a return of 9% for that 6 months. Okay, and assuming this trade finish, if the setup is still there, you continue to do another similar trade, maybe different strike price, you generate another 9%, and basically that adds up to 12 months of trade. You generate a return of 18% a year. 18%. Yeah, 18%. No need to actually go through so many things. Just structure it out based on this concept. You get a return of 18%. Yeah. Then of course, better still. When you trade options, most of us would actually have a margin account. Margin account is not that we are borrowing money from the broker. They basically let us leverage. And when they let us leverage, we don't need to have 3,950 to do the trade. Normally, it will be about 50%. We will only need to put up a capital of $1,800 to execute this trade. And of course, if your capital is lower, right, then basically what it means is that your return is almost going to double. Yeah. So from a 9% cash basis, you're going to generate a return of 19% for this trade. This trade. Yeah. 68% probability, 19% return for this 6 months. And if you do it again on the second half, right? Second half, another 6 months, right? So basically, you are recycling the capital, you are doubling it up, and you are generating a return of 39%. Okay, so based on this, who thinks options trading is difficult? Okay, I mean, for me, it makes sense, right? I mean, once you actually understand the concept of options and how it actually works, you get trained properly, right? I mean, all these concepts basically we train our students to actually understand firstly the concept of options, the concept of selling premiums. Yeah, we train them from the ground, and once they develop this mentality and how to actually control and how to actually structure trades based on probability, based on the additional certainty from charts and all these kind of things, right? It is not difficult to actually do this. Yeah, in fact, the income generation secrets training, our flagship training, right, which we do, right, the two key strategies which we teach is actually on selling of put and selling of calls. Yeah, which the selling of call is actually on this part. Yeah, so you see, you study a fundamental single strategy, and then basically once you understand it, the process to actually evolve the structures of the trades is actually very fluid. You can actually structure out however you want to actually in options. You can do it a lot of ways. So this is actually one. And of course, basically going deeper into how this can actually happen. How can you be guaranteed this 350? It does not make sense. You say, okay, I will actually tell you why. Okay, when we sell an in the money options, there is actually two values of this $8.65. Two values inside here. The first value is actually coming out from the intrinsic value. Okay, this intrinsic value means that the options is valuable by itself already. Why is it valuable by itself? Because people who actually sell these options people who actually you sell, right? That means basically they buy lah. Okay, people who actually take this up they can actually buy the option from you at $43 when the market price is at $48. Correct? So market price 48, they enter into a contract to buy from you at 43. So basically that forms an intrinsic value, which is basically the difference between the strike price of 43 and the market price. This is actually the $5 which you collected. But because you have actually entered into a commitment to so-called have the obligation to sell this in the future, right? This $5, you are just keeping it only, like it's not your money. You are just keeping it there until somebody come and take it from you. You're just keeping it there. So what we are focused on is actually not this $5, but basically the time value of money in this contract, the 6 months time value, which you are actually paid to wait. And this is actually what we call the extrinsic value. And this extrinsic value is this 350 here. So 350 plus 515 comes out to this 865. So this 350 is the value which we actually want to extract and want to generate from this trade. This 350, that is actually our profit to wait for 6 months until this trade expire. Yeah. So that is how we actually structure out the trade, and that's how this in the money covered call actually works. Yeah. And if you look at this risk profile here, right? So basically, if the stock price goes anything above 43, right? Above 43, you will win in the trade. Your break even is actually 39.50. 39.50 at here. Market price is actually here 48. Yeah, 48. And your break even is actually 39. That means if the price drop from 48 to 39.50, you don't earn a single cent. That means you break even. No money for these 6 months. Capital of 3,950 or 1,008 generates zero return. Yeah, that's a break even. But 68% chances it will end up above 39.50. Yeah. And when it end up above 39.50, that is actually where you will get that $350. Yeah. Okay. Yeah. And this is actually the position. If you buy the stock, that means if you don't want to trade options, you say, I trade options, I don't know how to trade, I don't want to waste time, option very risky. If you buy the stock, what is your break even if you actually buy the stock today, thinking that KWEB has already dropped down by 58%, that it will actually go up? Your break even is actually the price which you pay for the stock, right? Which is 48.15. You pay 48.15. Your break even is 48.15. But if you do it on the options way, okay, your break even goes down by 18%. 18%, your break even goes down. That means if China still have all this trouble, all the tech stocks still have all this trouble for the next 6 months, it doesn't recover. In fact, it go down. You have another 18% buffer from the current price until you start to lose money. Okay, so question: Who want to trade options now? Who want to become an investor and buy stock? This is actually the fundamental things that people fail to understand when choosing the vehicle or the instrument to generate income and generate returns. Yeah. So if you actually do it correctly, if you actually understand it correctly, if you get trained properly, right, this is the kind of things which you can actually structure out to give you a high certainty of returns, yeah, of returns. Yeah. So what are the key takeaway for this in the money cover call? Yeah. First is fixed return of investment. Okay, if you do on cash basis, you can generate 18% return. And then if you do on a margin account, you can go all the way up to 39 or 40% per annum. Yeah, assuming you do two trades of similar size, similar. Yeah. And then the other thing is that it gives you a downside protection. Yeah. Compared to just buying shares, you have a 18% downside protection by just structuring this trade. If you are not comfortable of 18% downside protection, if you are not comfortable, okay, you say maybe it drop another 20%. No, drop another 30%. That means I will have to fork out another 12% downside. If you are not comfortable, okay, if you are options trader, very simple, just buy another put, a very cheap put. Just take from your 350, right? You say, okay I want to be safe I don't want to generate 18% return I don't want to generate $350 Take $50 out of that premium. Okay, buy a very out of the money put. Okay, out of the money put, that will give you additional protection, more protection. you see you can again use the same. If you are scared, that means you have another fallback as an options trader. You can again structure it based on what you are comfortable, yeah, with another options strategy, by just buying a very out of the money put to protect it more. Yeah, earn less. Yeah, earn less. Yeah. So that is basically the thing which I actually want to the strategy which I actually want to talk about today. And of course, all this kind of strategy, we teach it in our more advanced classes okay, our more advanced classes. And I've actually we have actually a flagship training which we do, which is basically on an income strategy. This is our flagship we are doing it quite well right now. We have actually started to train for a few months now, and of course, some people have actually requested to move into more advanced strategy. Yeah, strategies like this thing which we teach in the Money Cover call, and of course, the more advanced strategy. Then of course, we are actually working on a new training, which is basically what we call a thrive a building options business. Building options business. This is actually the second training which we have actually just launched. We have just launched this, and of course, for those people who actually want to become how to say, get more knowledge lah. I mean, get more knowledge, get to actually structure out various trades depending on what kind of returns that they want. Then of course, the more advanced strategy thing is actually more suitable. And of course, for those people who just want to actually just generate a consistent income of 2% target a month, right? Then of course, the income strategy would be actually something which actually is like suits you. Yeah. So this is actually the Thrive Business Builder. Yeah, we have just launched it last month, and of course, for those who want to tag along with us when we run this program. And the thing is that we have just started to run this program, so there are a lot of things which we are actually teaching are all new to everybody lah. Yeah. So for those who actually want to start and learn the strategies, various strategies, not only one but various strategies. More importantly, I mean, I don't talk really on fixed strategy lah. More importantly, the concept of options. Yeah. Once you understand the concept of options, picking up strategy is actually very simple. So that is what core which we teach, what core which we train in our programs, which is the fundamentals, just similar to what we have actually done for the past half an hour here. In terms of this thing, we go through the fundamentals and trying to actually understand the core concept of each strategy which we are trying to do. Yeah. Not really the technique, the setups and all this is actually very simple. Once you actually understand that, yeah, you can actually do many type of trades lah. Yeah, based on the fundamental techniques which you actually learn. Yeah. So this is actually the Thrive training. For those who actually want, there's actually a link here. You can actually check it out if you're interested. Otherwise, you can also go to our proprietary training, which is actually talking about the. No, there's my YouTube channel. Okay, you can actually go on this thing here. Yeah, I have training on the income strategy Sunday, this Sunday. There's actually one on the income strategy. Of course, the Thrive Business Options Business Builder is there lah. I mean, I don't conduct any special trainings. It's mainly catering to existing students of the income strategy. Once they actually master this income strategy, most of them will actually move on to the options business builder lah. Yeah, options business builder. Okay, so that's all from me today, and I hope that you get a very good idea of where you actually want to be in terms of trading. Yeah, whether you actually want to become a stock trader or an investor, or whether you actually want to work alongside people like me, right, to become a options trader. By just understanding key fundamentals of options and structuring, and basically applying that to what kind of returns and what kind of risk which you actually want to take. Yeah. So that's all from me today on Traders Talk. If you like this, give me a thumbs up, give me a love thumbs up, share this video so that more people can actually benefit from learning how to trade options. Yeah, because once they actually understand trading options, technically, I would say chances are they won't actually do any other form of trading besides options. Yeah. So okay, so that's all. I will see you next week, and I hope to find something even more interesting than today. And we have gone to overtime today, and for those who have actually stayed on, thank you. Yeah, thanks, Dennis Pua. Yeah. So for those who have stayed on, thank you so much, and I hope to see you next week on Traders Talk. Until then, don't forget to trade, train, trade, and thrive. Yeah. See you. Bye bye.